All right, and I will do you guys a favor. I've tried to keep this. Jeanette knows me for a long time, and I tend to be long-winded, so I'm actually going to try to keep this a little shorter. So most of you have been promised to leave here at around 1. Maybe we'll be about 1:15. I know I'm actually supposed to be some here at 1. So I'm not going to rush through, but I'm going to show you some things, and you'll understand what I'm doing as we go along. By the way, I think Jim did a great job. I am an options trader and a strategist. Jim, if you're still here, I really like what you did in my classes in the past when I've talked a lot about volume and open interest and options activity, and I think he did. I know he was rushed, but he did a very good job, and sounds like a good opportunity, Jim, so I would encourage you to think about what he's doing as well. And actually, at the end of this, you're going to be given a 2 hours basic options course for free, so you can look at that and then look at Jim, and you'll be really ready to be an options trader. How's that? What I'm going to be talking about today is I've kind of evolved over the years as a trader and spent thousands in terms of trading, and I've come down with, for my lifestyle and what I'm doing, approaches that seem to help me. And that's what I'm going to share with you today. So I really believe that you can trade futures and you can trade options for a living. You can kind of consider me about a 50% of the time trader and a 50% of the time clinical psychologist. I love what I do, so it's really hard for me to stop being a psychologist. And I like helping people and giving back, although I'm getting older and the regulations are getting tougher, and so I'm getting more tired, so I may eventually become a full-time trader. You make a lot more money with a lot less hassles, but I train very well, so I like to at least put advantage to that training. What I'm going to be talking about is income generation with the E-mini, or the S&P futures, and the ZB, which is the Treasury bonds. Now, you can also use the ZN if you're familiar with these. I don't expect you, if you're new to futures, to understand all of this. I'm going to share some things with you that I do, and hopefully it'll help you to be more productive and more successful in your trading. Does not require some of the things Jim said, because a couple of things he said is good in terms of looking at that options activity and sizzle index and stuff to think or swim, but what I do is I just look at the futures and I trade off the futures. And one of the reasons why I haven't done as many positions with options is it's time limiting for me. A little bit about myself. I've been a clinical psychologist for 29 years. I've got a PhD and a master's, board certifications. I've also won not just awards in psychology, but awards as a trader, believe it or not, over the years. So I've got an unusual background. How I got into this stuff was just basically I wanted to make more money for retirement than you can make as a clinician. Trust me, managed care has been around for almost 25 years, and I found I had a real affinity for this. In fact, some people have actually tried to employ me as an options strategist with firms in Chicago, but I really didn't want to leave my sunny Florida. Chicago is a great town, though. If you've never been there, I'd check it out. So anyway, I've been doing this for a long time, and I also look at human psychology, and I actually do a lot of brain mapping and things like that, and looking at how the brain works to be more effective. And I've actually done some of that with traders. Quickly, I'll let you read this risk management. As you know, any of the things us folks show here is risky, and you have to be aware of that risk. We try to reduce it by teaching you risk management, etc. I won't be doing that right now. I'm just going to show you some setups that we tend to use. And when I talk about we, I am part of a group called Traders Den 24, and it came out of a group of other people from other groups, Jeanette one of them, and I can't believe we've known each other that long, but we actually have. It's kind of scary. It justifies my age, and I don't want to talk about that either. But anyway, Traders Den 24 is an interesting place because what you have is 5 or 6 traders. We take certain parts of the time clock, and we talk about trades, and we do trades. And so it's a little bit different. I always had this mindset of teaching people to fish. Well, I found out for busy people, it was hard for them to teach them to fish. So I kind of came in my own mind to the idea of we should be, fishing while teaching the fish, so you can feed them some fish so they can eat. And so it's a little bit different of a perspective. And really, I look at Traders Den 24 as just a room for traders to come together and to share and actually trade. And the moderators actually trade there with you. We've got some really good traders there, and also options are traded. We got John Andrus. John was actually one of my students probably 5 or 6 years ago. I think he's semi-retired, so he has more time than I do. He does a lot of trade setups and options that I have taught in my classes before. I backed off just because of a number of things, and now I just trade futures and day trade options for now. I'm hoping to go back into some swing trading as well with my options and spreads. But Traders Den 24 is an interesting group because I almost feel like we're a community of traders, and so really any fee that they charge you is just part of being that community. As probably Jim will tell you and other people will tell you, Jeanette, it takes a lot of money to run a business. I run a business, and it's very expensive to run businesses. And so, you might see a fee of $50, $75, and people think, oh, they're making mega bucks. Not really. There's a lot of program that goes in this, a lot of time. You got to pay your personnel. Jeanette will tell you that. She was a manager of a large trading group firm in training, and the poor woman worked her tail off. She was one of the hardest working ladies I ever saw, and boy, when she left, we were like in tears. Anyway, enough for giving Jeanette her accolades, but great lady, and great running rooms and running groups. Very, very good organizer.
Frank.
Anyway, so I'm part of.
I'm butting
You're
in.
welcome.
I'm listening. Stop talking about
Okay.
me. You can talk about yourself. Thank you.
But basically, we try to come up with a better way to do things, and a way that we'd be kind of like a group. So I'm going to start going through some of this. Thanks for modifying me here, Jeanette. That's what's great about her. But anyway, and she's blushing now. But I'm going to go over a few things that I look at in the morning. Now, this is not all the things I do or know, but I found it to be very reliable. So I'm going to go through a few strategies. Now, I'll try to make these available. I know this recording, I believe all this is recorded, so you can look it over again. I'm going to slow down a little bit because I don't want to rush through some of this, because for some of you there's maybe a lot of new information. For those of you who are more seasoned traders, I'm just showing you another way I found that may be effective to trade the morning for you. And a few of the other people who also trade in the room with me trade some of this stuff too, so we kind of trade as a group. It's very, very interesting, very unique kind of situation or setting. So one of the things that I think everybody should always think about are, what are the longer term charts doing? And because I'm doing day trading, I really don't look at much more than an hourly chart, because I'm trading the futures and I'm trading the indices. I'm not trading any stocks. Now, you could do some of this with stocks. I've just applied it to my futures trade and options trades. Now, what you're looking here is a couple things. I'll just explain them to you in case you're new. Point of control, basically, if you look at these blue lines in here, and they go horizontally, and they look like little mountains or like graphs that are going from left to right, those are volume profiles, and that's basically telling you where a lot of the volume activity is during those time periods. Well, the point of control is where most of the volume has occurred during those time periods, or those trading periods. So volume point of control can kind of serve as a magnet. When the market deviates away from point of control, it has a tendency to come back to point of control. Another thing you see here is the 200, in this case 200 hour, and it's based on any time period you're doing, but we used to call them 200 day moving average, but it's the 200 hour simple moving average, because this is an hourly chart. So you can see it's a chart going for about, I guess, 7 days, and it's hourly. And I like to look at the hourly charts just to get an idea where things have gone. Sometimes I'm away for a couple of days. It gives me a good refresher. And the only thing I mainly want to point out about this is I have a few other moving averages here. I have an 8, I have a 20, a 50, a 100, and a 200, and I will use these for trading as well. You can see how they branch out along here as they spread out and a trade initiates. But what I want to primarily show you here is I am looking at mainly the point of control and the 200-day simple moving average, and it's amazing what just a little bit of information can do for you. Now, one thing I will say, always be aware of the news, because news can move markets very quickly. So we always look at news stories. Forex, F-O-R-E-X, factory.com is a great place to see where news events are coming. Fed news, Euro discussions, anything that happens around the world in news will be in forexfactory.com, and I would recommend you watch that if you're a trader, even if you're a swing trader, because you want to know what's coming up. So besides knowing when the news story is going to come, because we might step back until news has happened. In fact, a lot of times I'll do that, and then I'll start trading once that news has occurred. But the hourly charts are very important, at least in my opinion. Those arrows, that's just an indicator. I think that was Carter and Hubert's indicator. You get them free on Thinkorswim. I actually paid for some of mine, believe it or not, on eSignal. But it's just kind of giving you an idea of when it may be a long or a short. They delay a little bit. So when they happen, they delay. I'm not going to be talking about that. I'll leave that for Hubert to talk about when he gives a presentation. But these just happen to be on my charts. I paid for them, and actually they're free in Thinkorswim, and I use them. And they're neat indicators. But really what I'm focusing on mainly is the 200-day moving average and the point of control. And remember, the point of control is based on volume. So there's one hourly chart, and I'm giving you another hourly chart just to give you a couple of different examples of this. Again, this is over a period of days, and I'm showing you the point of control, and that's that white line. And you can see down here in the lower right-hand corner the 200 simple moving average. So with different charts, we're looking at the same things. Now, I'll talk more about how to trade these. I just want to give you an idea. So I'm looking at this. When I see an hourly chart, either like the other one or this one, and I see a big deviation between the point of control and the 200-day moving average, I realize that certain things are going to occur. These point of controls or these 200-day moving averages can become magnets. Now, these are available on most, if not all, charting software. This is the Thinkorswim charts. I have e-signal charts. Most decent charting software, I believe in Interactive Brokers even has it. I believe in NinjaTrader has it. You can put these in your charts. So if you just go where they have indicators and you look them up, you can see them. And oftentimes you don't even need to have that volume. See that big green thing going from left to right, or that brown thing? That's actually the volume profile. You don't even need that. You can just have the point of control if you want less information. Sometimes I throw this stuff on there, and believe it or not, I kind of don't even see it anymore. But again, I just yanked these off one of the packages that I use, and I threw them on there. Most important thing for you, again, in this conversation is the point of control and the 200-day simple moving average. Very important. This, by the way, dotted line is an 8 EMA. You will see sometimes, if you notice here, notice how the 8 EMA, exponential moving average, notice how once we go above it, that's that dotted line, and the 12 EMA, notice how these markets move. Very, very interesting. And that's another course or another time. I do talk about that, and I'll talk about that in another presentation I do. But you don't even need to necessarily know that to do this trading. Okay? All you need to know is where that 200-day moving average is, where the point of control is, and when news is coming out. All right, so here's my rules, and I call them my pre-market futures trade. I'm going to talk about a pre-market futures trade, meaning before the cash open at 8:30 Central or 9:30 Eastern, and I'm going to talk about the cash market early morning trade. Okay, so what basically do is I want you to get the bigger picture, so you look at that hourly chart. Enough said about that. Then look at the spot price of the futures market. What is the spot price? The spot price is where the market is at the time. So in other words, where is the E-mini at the time? Where is the bonds at the time? Where is the NQ at the time? So it's just what spot is that market at the time? Basically, where is the market? So we look at where the market is, we look at the 200 simple moving average, and depending on our chart, if it's a 2-minute chart, then it's going to be computed on 2 minutes. So it would be a 2-minute 200 simple moving average. If it was a daily chart, it would be a 200 simple moving average daily chart. You do not have to do that. When you shift your charts from a 2-minute to a 15-minute, even to a tick chart, it will do that automatically for you. So if you're new here, you don't have to learn how to do all that stuff. You do have to look at, if let's say it was Thinkorswim, for example, or NinjaTrader or one of them, you're going to have to just look at where, look at where they show you how to go in there and change your indicators. Point of control, again, same type of thing. You can find it from your indicators, but I look at the 200 simple moving average. Doesn't make any difference what chart you're on. I look at the point of control. I also find 240 tick and 15-minute charts are good. Now, they're important because it kind of lets you know where the bigger turns may occur. I tend to be more of a scalper when I'm doing this. I joke around and when I'm in the room and I talk about 3-tick ponies on Blue Horseshoe. By the way, Blue Horseshoe, just so you know, that's a reference to lines in the Wall Street movies, and I won't go into who those are for time. And I started out as the Blue Horseshoe, believe it or not, a number of years ago, and then because I'm a doctor, they all started calling me Dr. Blue Horseshoe, so I kind of like it, and I continue along with it, just so you know where that came from. But basically, some of the people in the room like to do a little bit more of a swing trade during the day or a longer term trade. They'll look at the 15-minute charts. And many times with the bonds, they can be very helpful. You'll see the confirmations. You have a 15-minute chart, and then you can confirm with the 240 or a 2-minute chart. Now, another interesting thing to know about is a lot of ticks can occur within a very short space of time. So when you're talking about ticks, you're talking about trades. When you're talking about minutes, you're talking about time or hours time. So you'll come up with different charts. If you've got a very fast-moving market, you might want to look at the ticks because you want to see what's happening to them. Okay, and again, I won't go into great detail of this because you're going to be welcome to come to the room and watch us do this live for free, essentially, when you see what this is going to be. But anyway, I think these are good things to learn. You're going to have 30 days to watch me do this stuff, believe it or not, and don't leave, because when you see what this is going to cost, it costs less than getting a meal at McDonald's for 30 days. Little segue there. So these are what I look at. These are the particular parameters. Now, I like to do what I call check the extremes after Europe. So I like to look at the market in the early morning. I don't stay up all night. Now, Bill Costaritas, who's part of this room, Bill actually started Traders Den 24, and Bill has been trading the night futures for, I don't know, for forever. I mean, when they had the old Globex machines, Bill trades differently in the evening. He picks it up early evening, I guess you'd call, and then right on through to the European Open and the German Open, and he trades those. Now, he trades based on experience, a little bit different way of trading. Each of us, depending on the time frame we're trading, have slightly different strategies we use, which makes sense because they're all different. So what you want to do is you want to check the market early in the U.S. So, you get up at 5, 6 in the morning, doesn't make a difference. Go have your cup of coffee and take a leak, and then, get your machine starting up or leave them overnight. I sometimes will leave mine overnight, and then just see where the market's been. And you can do that with an hourly chart. You can even do it with a shorter term chart. But I want to know what's gone on overnight, because sometimes you'll see big moves with Europe. A lot of times they will retrace those moves. When you see the German market open, the DAX is very powerful. You'll see a movement with the DAX, which is the German market, and then you will see recoveries of those moves or breakdown. If you look at larger term bars or where the consolidation is, it could break down or break out and up, or it will retrace. And as you start to watch it, you really start to see this. I do watch the German market a lot to get an idea of what happened, and then I look at our market. There's kind of a handoff that occurs between the Europe and us. Starting around 6, 7, 8 in the morning, they start turning it over, and you can see that by the volume changes. Now, what I like to do, and you can trade any way you want to trade, I look at market extremes. I like to trade the turns or the changes. So I will look to see if I get a high of the early morning. Now, the early morning could start, usually it's around 5 Central, 6 Eastern. That's about when this happens. You see it start consolidating there. You can still trade it. Sometimes I don't get up till 5:15 Eastern time, and it's already started, but I know the pattern enough that I still can jump on board. And this pattern could continue for another hour, or it can continue right until the 8:30 news, and sometimes it continues more. We'll talk about that. But what I like to focus on is either the high of the early morning or the low of the early morning. Looking at Europe, okay, now we had our Europe activity. What happens into our morning? What's going on around between 5 and 6 and 7, what's going on there in the early morning? For me, the sweet spots are around 5 Eastern time. Okay. Now it could be a little bit later. It could go 5:30 or something like that. So if you're there right around that time, you're good. So I'll look at the low or the high. If I put in a high, I will start thinking about short selling futures. So I'm going to short, let's say, the E-minis. If it puts in a low, I'm going to think about going long the E-minis. Now, I'm going to show you some other things to look at that will help you with this, because low could go lower and high could go higher. Now, I will tell you, if you pull up these hourly charts and you look back and you look at opens and closes of the previous days, you will start seeing points of control. So in other words, when I'm doing this, I can look back and say, it's really interesting. It's early in the morning, and it looks like I'm getting support. And lo and behold, if I look back at the chart, I'm going to find a place where there was a low from before. It could be that night. It could be the day before. And that helps to confirm to me that I'm in a good place. Another thing that I don't have in the slides, but in terms of stops, once I get in these, since I'm trading extreme, I have a very tight stop. I could be anywhere putting my stop right where my entry was, or just maybe 4 or 5 ticks below it, because remember, I'm doing a scalper trade to start with this thing. You would be amazed what 10 contracts can do for you in a 3-tick pony, as I call it. Each one of those ticks is worth $12.50. You multiply it by 10. you can make quite a bit of money doing three-trick ponies, or you can keep one of the ponies running. Now, one or two running and continue the trends. I'll often reset the trades. These early morning trades, they'll move a little bit. Sometimes you'll get chopped. They'll move 3 or 4 ticks, and they move back. Move 3 or 4 ticks, move back. I joke around. I said, well, I'm taking a third bite of the apple on the same trade. Why not? You know, take your money and run, so to speak. That's what you do. But you don't have to be a scalper with this. You don't have to use 10 contracts. In fact, I would recommend most people who are new don't use more than 3 contracts if you want to let one run. If you just want to get used to doing this, 1 contract's fine. Put 1 contract on. You're going to make 37 bucks, you know, on that one move, and there's going to be multiple moves, trust me. Typically, you'll want to go a little, you know, you want to put a little more on with that. The good part is you're not waiting all day. You could go ahead and do these trades, and by 10 o'clock in the morning, you could be leaving and did handsomely. All right, so again, like I said, I like to check the extremes after Europe. I look at, okay, what just happened after Europe? What went on? Now, this is a 2-minute chart. Now, if you look at this chart, I've identified the 200-day moving average, which is in red. I've identified the point of control, which is in white, and I've identified what I call the extreme. In this case, it's the low. Now, again, this is a 2-minute chart. What I know, and notice the time there, if you look at the very bottom, right before it says material copyrighted, right above there it says 6:02. Remember I said that sweet spot is right around 6 o'clock? And this is Eastern time, by the way, because I live in Florida, so I set it on Eastern time. Notice where that happens. Now, you can see that I've identified an extreme low here, because if you go further back in the chart, you will see what happened in Europe. And Europe might have been at that low, came up, ran up, and has come back down again. I'll go more in detail about the specifics of this, but remember, I told you that the 200-day moving average and the point of control can be magnets. So you can see how we've diverged, we've moved away from the point of control overnight, and we moved away the 200-day moving average. So as soon as I see a situation like this where I'm starting to see, you can see the moving average crossover here. This, I believe, is an 8. I'm sorry, it's an 8 and a 20. Right here, the gray is the 20, that's the 8. That's an indication to me that I should be going long. And once my stop's at that entry, I can hold on to it. And you can see what happened over the course of the morning here into about 8 o'clock. You've got a nice move there. In fact, even if you entered at 44, you've got about 4 points on the E-mini. That is a substantial sum of money, even if you only have 1 or 2 contracts running. So, again, this happens over and over and over. In fact, I really get frustrated because if I get delayed getting in and it's already 7 o'clock, it's like, darn it, I've already missed part of the move. But notice there's a consolidation here. So I know that it's still going to be magnetized up. So even if I'm late, I say, hey, it's doing what I know it's going to do. So I'll enter. I'll watch for a breakout above, you know, where that higher consolidation is, and look what happens. I still got a couple of points out of it, didn't I? So it's a really good way to trade futures. Again, this is the 2-minute chart. Now, remember I said I like to look at larger term charts just to see what's going on. Now, I am trading off a 2-minute chart. Please be aware of that. Why I made this chart, I just actually made this chart last night. You can see the date is the 22nd, and it's 8:30 Eastern time. The reason why I did that is if you look at this 15-minute bar, it's that long bearish bar. I want to show you something that's going on here. Notice your 200-day moving average is way at the bottom. You can see it labeled there with the arrow. Here's your point of control. It's that white line. Notice how the market earlier in the morning, and that's around 6, had diverted away from it, even on a larger term chart. Notice what happened here over the course of the morning going in toward the news. So again, the chart I showed you from before was a chart, I believe, of like 2 or 3 weeks ago. This is a chart from yesterday. Again, this is a 15-minute chart. What you can do is as you're doing these trades and you enter with that 2-minute chart just to get your scalper trade in, let's say that you had the news, you see the news was unhappy news, basically. Actually, it wasn't unhappy news. Sometimes they can say good news and the market goes down. I really don't care what they say. I care that I know that the news is a mover. The news can move the markets. By the way, if I'm not responding to a question, it's because I've expanded my whole thing, and it's hard for me to show my whole slide without looking at that. So at the end, you can repost them, and I'll try to answer them for you. And again, I'm trying to cut time a little bit for you guys because, you know, I know all of you have things to do. I think time is more valuable than money. And that's why I do this type of trading. I don't want to be sitting there monitoring trades 24 hours a day. Our room has 24 hours so that people can come anytime because of your time is valuable. But again, if I got into a 2-minute trade, and this was on Friday, and I have my news, I could actually go and look, and as long as the 15-minute chart has not told me it's going to stop, why not hold on to at least one contract and let it ride, baby? Just let it ride. Now, this was a very tight range on Friday. Very tight range, but this happened in 15 minutes. So you might have caught 3 points in 15 minutes, and that's not bad. Trust me. Add the numbers up. Every time it moves a tick, you make $12.50. Every time it moves a point, you make $50. Even if you only use one contract, which I don't really recommend, but let's say you did, you'd still be doing okay. 3 points, $150. Not bad in 15 minutes. Head off to work. Very few people make $150 in 15 minutes in their life. But this is very consistent. It does it over and over again. Also, notice how we came down to that 200-day moving average and we start chopping. Why? Because that tends to be the magnet. Now, could it break below that and go further? Yes. But because the point of control is above that, and notice how it just sliced right through that point of control. So as this trade was going on a 2-minute chart, and I'm watching a 15-minute chart, if I see that point of control, which actually had been established before this, I would start thinking, okay, if it starts bouncing off that, point of control, I might want to get out on these longer-term charts. It did not confirm a reversal on the 15-minute chart. And again, this is on the E-mini, so you could have kept holding it. I will tell you, when it hits that 200-day moving average, if I'm in this trade, I liquidate. I'm happy with what I make. Greed is a bad thing as a trader. In fact, greed and fear, you all hear about that. I'll tell you what's the worst thing. It's betraying yourself. It's not being true to yourself, and you're not true to yourself when you don't trade your plan and plan your trades. So let me tell you, if you know how to trade a strategy, like I know how to trade a strategy here, the worst thing I can do is not trade it. It's worse than fear or greed, and that's part of the psychology of trading that Jeanette was referring to. One of the things that traders do is they almost know what to do. They have these nice setups. You got all brilliant people here. Jim's brilliant. I wasn't here earlier for the other two people because I had to help with a few things, get a car for oil change. But the reality is these are really smart people, and they trade, and they know what they're doing. If you pick up their plan, follow it. And you don't know how many times traders get very upset and frustrated because they didn't do what they knew to do. That can be more destructive than being greedy or fearful. So I just gave you a little tip from my human performance of trading. That is a very key point. We even know that about if you have special forces guys, how they get themselves killed is not to follow their program. And how they get themselves injured is by not being true to themselves. So I'm giving that to you as a little tidbit. Take some time thinking about that. Notice how we bounced off of this and came almost right back to where we were. So technically, if you wanted to, remember that's a magnet and that's a magnet. The 200-day moving average is a magnet. The point of control is a magnet. You could have traded off that for a little bit more. I'll take another trade. I don't mind. And again, look what happened. It came right back down to that magnet. So I wouldn't get greedy. If it goes above here, I'd make sure I'd be having a trailing stop right here because I don't want to go through any risk with that. Notice it tested it again. But you see how that magnetized? We had a negative market in the morning, and every time it would get some momentum, probably profit-taking, coming back to where it happened. And they'll often retrace this stuff. Notice they had a negative bias on Friday. So several times you could have actually taken this trade. Now, again, it's later in the day, so I might be gone. I don't know how long this goes. I'm usually exiting here at around 11:30 Central Time. Also, another thing you can look at is the 240 tick chart. Now, here's another interesting thing. When you were looking at that 15-minute chart, remember how we bounced up and down off that 200-day moving average? This is interesting. When you look at the 200 tick chart, so these are trades, same day, you see the news come out. Notice how the ticks came down, took you to the 200, took you to the point of control, and then came back up to the point of control, and actually came back up to the 200 again. These are day traders coming in and out. But notice how the trend. Remember, I said it was a negative day. The 240 tick chart and the 15-minute chart can keep you in a trade because these are trades going on. As long as this thing is pointing negative, and by the way, these dots is an 8 EMA, just so you know, that's an 8 exponential moving average. if on a 240 tick chart, as long as this is continuing, you can actually continue to take this trade. So even if you got out and you said, look, I made some money, I'm happy, made 3 points, I'm out of there, comes back up, you see it come up again and fail, you could watch for the breakdown below this. Again, that's a 13 and an 8, and you could continue to ride this through some more. So you can use those moving averages as well, but you can see how that 200 and that point of control help you. In fact, if you go further out on this chart to the right, you're going to see that eventually the market comes back up to those point of control and moving average. I don't know why it does this. As a psychologist, one of the things I was taught is to observe human behavior. We don't care what kind of diagnosis you came through the door with. I think of prototypes, okay? I want to see what symptoms you're presenting and how I can help you with those symptoms. I don't give a darn what kind of diagnosis you were given. That's just a label. Labels to me are meaningless. You know, if you come in and you're labeled with a generalized anxiety disorder, I want to know what your symptoms are and how I can help you with the symptoms. I am treatment-oriented and curative. I am not disease model-oriented. Same with markets. I look at behavior. A market is social psychology, by the way, folks, whether you know that or not. It's group behavior. Humans tend to repeat patterns over and over again. In fact, Jim made a reference to that earlier. He was actually talking about social psychology. Probably didn't even know it. He's not a psychologist. But interestingly enough, so I know that humans have repeatable behaviors. So do groups. If you look at history, you will see we repeat things over and over again. Unfortunately, hopefully we learn through history. You can do a similar kind of trade on the ZB or the ZN. Some people, you're talking about 10 and 20, you know, 10 and 30s. So I do the 30-year bonds. You can do the 10, it doesn't make any difference. In fact, a lot of the guys like to use the ZN because they say it's smoother than the ZB. That's fine. I just had a lot of experience with the ZB, so I use the ZB. Maybe I need to be more flexible and move to the ZN. Maybe I will. Some of the guys in the room say, Frank, you're really good at this. Trade the ZN. So maybe next time I present this, you'll see me putting a ZN here. But I'm showing you what I have experience with. So we do the same thing. Repeatability is very important in learning. We look at the spot price. We look at the 200 SMA, we look at the point of control, we look at the 240 tick, and that should actually say 240 tick, by the way, not 240. I missed that last night. It should say 240 tick and 15-minute charts. A lot of times I will update my slides the night before a presentation. I like fresh stuff, so that should say 240 tick. So it's not 240-minute chart. It should say 240 tick. I'm not sure if that was an error on the other one, so please be aware of that. If I distribute the slides, I'll make sure I put tick in there and I correct them. And again, I'm looking at a 2-minute chart on my trades. However, I am looking at these longer-term charts to see where the bigger turns are because those can give you more of a trend trade for the day. So again, we're looking at, now this is not the E-mini. Notice it's the Treasury. It's the Treasury, U.S. Treasury bonds is the ZB that I've been talking about. And again, here was news. Now, it's interesting. A lot of times the bonds and the what do you call it, the futures, the E-mini, will be opposite. They'll be inverse relationship. Lately, they'll trade together. I really don't care. I'm looking for extremes. Again, news comes out. All right. Now, this chart was, it's 10:30 where I put my cursor, but this had happened at, just so you know, at 8 in the morning. It, again, is a 15-minute chart, so you look up here. So I just want to show you again these longer-term charts. The longer-term chart showing the trend. You can't see the point of control on here, but what you notice is here's the 200-day moving average. What did this thing do? Notice how the market started to deviate away from these moving averages. This is early in the morning. You'll see this a lot of sideways action, a lot of consolidation. It can break up or down. Now, you could take this trade, you know, God, I remember Hubert Centers used to talk about this, Carter, those guys, I've seen those guys for years talk. They talk about, you know, and other people, Dave Landry, I don't know if he's around anymore, a really neat guy, swing trader. He would look at what they call these fannings of these moving averages. You can use that as well. Hey, you get decent trades off of them. But what I want to point out with this slide basically is here's an extreme. Notice here's the 200-day moving average. So notice how far way back here we moved away from that. When you get those extremes, you know, you don't know what the news is, but a lot of times if you deviate from the mean or from that control point and it goes out, there's a natural tendency for it to come back.
So I'm showing you on a 15-minute chart. Now, again, would I be trading the two? Yes, but what is the 15-minute telling me? It's telling me the bigger picture. You can see the bigger picture here. I might not see this as well on a 2. I might get out here. But the 15 is saying, hey, buddy, stay in there. You're above. And these white dots in this case are the 8 EMA. As long as I'm above that 8 EMA, I might want to stay in that trade. And that's any kind of trading. That's during the day. You don't have to do that with pre-market too. But then you get your news out. Boom, it drops. Again, you see how it broke below. You get your opportunity to trade. Didn't quite make it to here, but let me tell you, folks, if you get in at 154, let's say 154 on this. This is I think $32 or $34 a tick on one contract. If you grab it from here and you even do 40 ticks, do you realize how much money you made even on one contract? That is, if you look at the movement there, we got from 154.20 to 153.20. Literally, that is a whole 100 ticks. That's a massive amount of money. So again, you can go in here 1 to 3 of these things. It doesn't cost you much to trade. You don't have to worry about the day trading rule. We'll talk about that in a few minutes. That applies to only options and stocks. I am going to talk about trading options too using some of this stuff. It's going to be my little bonus at the end there. But bottom line is, you can see how this can be so helpful to you. So, and again, you can look at the video again and again and again and get this in your head. Trade off extremes and look at the 200-day moving average. And I'm just showing you it works with bonds too. Here is, you can't see it, but this little squiggly thing here is telling me that it's a tick chart, and it's a 240 tick chart. Notice how we break down here. This is at 8:52 a.m. You can see where I had my cursor at the time. Here's your, remember the news thing? Deviates, comes down to a 200-day moving average. Notice how we consolidate, consolidate, consolidate. There's your magnets, the 200-day moving average, the red one, and the point of control, that white horizontal line. We came down, had an opportunity for a trade there, go sideways. Look what happened later. We start deviating again. You can take a trade off this. Put your stop very tight right after you get in. Look what happened there. And by the way, the bonds can be very trendy. The bonds can move one way and then move back and retrace that move. Bonds are a very, very lucrative thing to trade. They're expensive because it's going to cost you $34 if you make a mistake every tick that goes on. But you can start with the E-minis. You start getting a handle on this. Sometimes the E-mini will linger and go 2 points. This thing will give you 40 ticks. So just be aware of that. And again, same type of thing. We deviated. And if I were trading this, I'd say, now, wait a minute, we've deviated really far. So later on, there may be an opportunity. Now, the bonds start to slow up later in the day unless the Fed is giving an announcement at 1 o'clock Central Time. So again, pretty much, and I'll talk about this, I kind of end my trading after the morning. So here's what I call the rules for the wake-up trade. These are kind of, I talked about them, I showed them to you, different things. Now I'm going to talk about it. If the spot market is at or below the point of control and below the 200-day moving average, so it could be below the point of control, we've seen that, or it could be at the point of control, but it's below the 200-day moving average on a 2-minute chart, you could consider buying that long. Just go long. Buy those futures long. Because what's going to happen is it's going to be a magnet back to that 200-day moving average. Okay, it's weird. It just does that. I don't know why. Okay, so again, looking at that point of control, looking at the 200-day moving average, if the spot market is below the 200-day moving average and below the point of control, you have a high probability trade to the upside. Look at your 2-minute chart. You can also look at your 240 and your 15s to get a bigger picture for what happened after Europe, and then you got an opportunity for a trade. When you get that extreme and it's confirming, and a lot of times it's like between 4:45 and let's say 5:15 Eastern Standard Time. I mean Central Standard Time. I have trouble because I'm Eastern and we always convert to Chicago time. But again, perfect time. You know, you can actually just do that one trade, scalp some points, and go to work. This is something you could do before you go to work in the morning. That's what I love about this. In fact, this is why I set this up. Now, again, I don't start work till typically 12 o'clock, till noon Central Time, Eastern Time. But I had to set up a trade for me because I had so much going on I couldn't monitor my option trades. I would be up thousands in option trades, and I'd have patience, and I'd have disasters in the afternoon, and I couldn't change my stops. I couldn't adjust things. And so that's how I got into doing these trades for myself in the morning. I created a setup for myself. Again, you can go short if the spot market is above the point of control, or it's at the point of control, and it's above the 200-day simple moving average, meaning this 200-day simple moving average is below the point of control, or the spot market is above the point of control and the 200-day moving average, watching a 2-minute chart, consider selling short. Okay, it's very simple. It's just directional, and it happens every day. Now, sometimes it's a slow grind. In the past week or two, it's been kind of slow. Other than that news you saw there, I mean, you're waiting, and you're waiting a long time to get 4 points. But remember, I write a lot of 3-tick ponies. If I write a 10-lot 3-tick pony, I've made $300, $350 or $325. I don't even look at the amounts anymore. I just trade it. If I do that once, that's a nice little thing before I go to work in the morning if I had to leave for work at 9 a.m. Eastern Time or 8 a.m. Central Time. Also, I could do 2 of these because there's usually an opportunity for 2 or 3 of these in the mornings. Well, you do 3 of those, you made $1,000 for the morning. That's more than most people make in a week. The average, or what they call the mean, not the mean, the median salary in most cities is $50,000 a year. So if you did this every day, guess what? In 3 hours, you made the median salary, or less, actually. It's usually less than that. Also, look at the Renko and the volume profile charts. Renko charts are just pure volume charts. Volume profile is what I was showing you, that chart that goes from left to right. We'll see more of them as I go through here, a few more charts. But those are very, very valuable charts. Okay? So in our room, we actually project a Renko chart. Renko charts are very, very good for trend trades. So I don't project the Renko, but they actually, I think Jeanette projects it from her machine for us because she tries to monitor the room overnight and projects those up so we don't have to worry about them. It's another great thing if you want to do a trend trade. So I'm not telling you this is all you can do. You can do this particular trade, but then watch that Renko because that can keep you in a trade much longer. So I'm showing you some scalper trades, some short-term trades. You can maintain this. If you have a 10-lot, you can keep a 1, 2, or 3 lot running for an hour or two and do really nice into the cash open. Okay, now, here's another example of the 2-minute extremes. We talked about it just again to make my point since I talked about the strategy. Again, we're seeing this is 7:44 a.m. We get this extreme again. We got this extreme happening. Here's your 200-day moving average. Here's your point of control. This little light blue thing you're seeing here is the volume profile charts, and they all can be pulled up free on your charting software. I'm more interested again in the volume point of control. Notice how earlier at night, we go up, we come down, and notice how we were having trouble breaking above the 200 during this whole period of time before 7 a.m., 6 a.m. We start coming down, you start getting this, and this is probably occurring right around 6:15, I think, somewhere right in there. You see that it puts in a low. In fact, it's really neat. Thinkorswim will actually show you this little thing that says there's a low, but I mean, you can see it too. All of a sudden, very patiently waiting, and why would I think long? Because where is my 200-day moving average and my point of control? It's above. So if the spot market is below those 2 magnets, then I'm going to want to be pulled toward those magnets. So I get my little crossover here, real nice. I'm above the 8 EMA. I'm also above the 13 EMA and the 20. Not a bad time to take a trade. Hold it there. And up we go, and not a whole lot of points. And I put this in here. This was actually taken just from yesterday because I want to show you kind of boring days and better days. Better days, a nice 8-point move. This is like, 1.5, 2 points. But again, this is pre-market. You will have another opportunity. In fact, remember when the news came out at 7:30 Central Time, there was a big opportunity. This is just a trade I like to take early in the morning. This is when I moderate the room. This is a slow move. I don't like these slow moves. Why did this happen? This happened for 2 reasons, I can tell you. Number 1, because it was Friday morning. Number 2, there was news coming out at 8:30. Number 3, Monday is Memorial Day. The markets are closed. You're going to see tighter ranges before a holiday period, and we're in the summer. So a lot of these guys are gone already. So again, they're not going to make their money on that 3-day weekend, and a lot of people don't. Maybe it was a negative because they don't want to be in over a 3-day weekend. But again, very simple strategy, Same thing over and over again. You know, repetition. When you get in your car and you drive your car, you don't try to drive it a different way every day. You get in there, you turn on the ignition, you know there's an engine in there, but you don't have to examine the whole engine. You don't have to understand internal combustion engines to drive a car to work every day. In fact, most of you do that. And you drive a car and you put gas and oil in it, and that's it pretty much. And watch the idiot lights. We all do that. It's gotten worse with all these idiot lights. I used to like the gauges. But bottom line is, you don't have to break the engine down to know it. Here's another example. I'm showing you same day, but here's where you had the consolidation after that slight move up, and then what we see here is, lo and behold, we had the news story. And again, if you miss that, not to fret. On most days, you put in an extreme. It will tend to retrace that extreme and come back up. And if you can see that little white line right there, there's your point of control with the arrow. Here's a 200. We get magnetized back to that again. And lo and behold, look what we did. Got magnetized back again. So 940, look what happened there. We came back. So here's that extreme I showed you. Oh, well, one other thing I want to show you here, which is very interesting. Notice where my point of control is here, right around 21, 28, 24. See that purple thing, that little purple bubble on the right? Okay, see where that is? Now watch what happens with that point of control. See how once we started trading down here, the point of control moved? What did I tell you about these trades? If you're at the point of control but below the 200-day moving average, what tends to happen? You move back up. Look what happened here, folks. And by the way, the point of control will move based on volume. There's a lot of volume being traded right here, which also that volume profile tells me something. When you get a lot of that volume, you could be at a support at the bottom or a resistance at the top. So look what happened. Consolidation starts coming off. Pretty volatile, but eventually it comes right back to the 200-day moving average. It does it over and over and over again. I can't emphasize that. So again, I'm just showing you other examples of this stuff, and I would put this one in there so you can see how the point of control moves. So it came off the point of control in the 200, went down with the news, chopped around. I guess they were, you know, getting their stops hit or buying because they knew it was going to go back up, covering shorts, probably a lot of short covering, whatever they were doing. And lo and behold, what happens? It comes back again. So again, this is a recurrent strategy, simple strategy. This is simple. Here's a 240 tick chart. Again, on the ZB, I'm showing you a similar type of thing that happened, again, Friday morning. Notice how you get more movement in the ZB. So we only had a couple of points movement in the E-mini in the morning. So a lot of times, if you're not seeing a whole lot of movement in the morning, the bonds tend to have a lot more liquidity. I've heard that bond traders are some of the best traders out there. I don't know, they claim they are. I'm just repeat what I've heard. But again, same type of thing. Here's your point of control. Here's your 200-day moving average. Red line, 200-day moving average. White line, point of control. We're bouncing around again, around it. Lo and behold, we start breaking down, pull back once, and then look what happens. And here's an extreme here. If you actually wanted to, if you were out there earlier in the morning, I can't remember when this was, here's another extreme. You see it cross over. You'd actually have the potential for a trade back up to that 200-day moving average. Here, we're looking at an extension down. Now, again, when this extreme occurs, you could actually trade off this extreme. And again, a lot of times it will go up to the 200, sometimes we'll break up to the 200, go higher, and then come back to the 200, consolidate for a while, and then break down. But again, when I see these extremes, it's a heads up. And if I see a consolidation like this with an extreme pullback on both of these things, it's a heads up to say, blue, you better start watching for a long here. And don't get frightened by this. You know, you can get shook out. Oh my gosh, it's pulling back. Let me get out. Well, you know, this is quite a few points. If you had 3 or 4 of these contracts, hold on to one and just move your stop below these candlesticks on these 240 tick charts. So what if you got stopped out? You made some money. And again, that's risk management. I'm not here to do that. I'm here to hammer home a strategy that I have found works over and over again in the mornings. Remember, I'm saying in the mornings, what Jim said before me, follow what they're telling you. If it's 2 years out, 2017, you know, don't be trading the options contracts front month. You got to follow the leader, so to speak. And again, I'm showing you again the ZB on a 2-minute chart. Notice again, we're at the 200-day moving average. What happened? Here's your point of control down here, breaks down, and it comes down to the point of control, actually slices that, comes back to another extreme. Now I know and remember, this is a news move. News moves tend to retrace. If you made all that money as a computer off that move, you'd want to take some profit. These are day trades, folks. This is a 2-minute chart on the ZB. Comes down. You got your extreme. What's this telling me? Start watching for a movement back up at least to the 200-day, at least to the point of control. That's not a bad trade right in here. You know, that's quite a few points actually if you look at this. And again, you know, you can see where these are. This is probably around 20 ticks at $30 a tick. I round everything out. I don't get obsessive about the stuff. But look at this. And then we did it again. It was a negative market. We come up here, fail the point of control. Look what happened later again. So again, learn these things. Pay attention to these things. Very, very important. Now I'm going to share one more thing with you. I'm almost done here, and I'll end a little early. Here is what's called LinReg, or linear regression lines. These are very interesting too, particularly when you're trading the bonds. This is a 240 tick chart. If you want to take a trend trade in some of these things like the bonds, look at a 4 and a 9, and that's just like a moving average. It's linear regression. This is Thinkorswim. It has it. Ninja has it. Most packages have it. You set it up. It's these little brownish dotted, these dashes. So the circle is my ADMA, but look at these dashes. What you learned, and I put little circles here to show you when, and again, notice our point of control here. I'm going to be finishing in just a minute. I might have done that myself. I don't know. Look at your point of control here. See how we're breaking down? See how that's breaking down there? When the 9 crosses over the 4, and now you're below it, and notice we're below the point of control, you got an opportunity for a trade. And if you entered in here, you haven't been stopped out if you put your stop where your entry was. Remember I talked about that? You could have already liquidated a chunk of your contracts. You're getting a couple of nice ticks there. Notice what happens though. We pull back, we fail again, and then look at this trend. And as long as it stays below, see how it crossed over right here? See how that the 2 brown things crossed over the 9? You start getting the crossover again. The 4 crosses over the 9. That's telling me you might want to get out of the short once it crosses back, because it's changed direction. But then look what happened. Came back down again. These circles are just to show you. I'm going to enlarge this in just a minute. I'm almost done, just to show you that to you. So again, here's the enlargement just to show you the 4 and the 9 linear regressions on a 240 tick chart. And again, the lighter color is the faster one. The darker color is, and you can take them any color you want, but I just want to show you what happened. It's showing me, hey, guess what, dude? These things are crossing over here. As soon as you break below them, you got a potential trade, and sure enough, I did. Here's on the bottom side. Remember we saw the circle at the bottom? I'm showing you you're coming off the bottom, off the extreme. Those linear regressions on these 240 charts can actually give you an indication of longer-term trends. Now, again, as the morning goes on, the bond trades are not as good as they are earlier in the morning. So I like to look at them early in the morning. But again, that linear regression 4 and 9 is important. One other point, these 200-day moving averages and the point of controls often are not as effective after lunch hour. After lunch hour, everything kind of consolidate, traders go away, so don't try doing this strategy, and this is just to emphasize, this is a morning strategy. You can do it in the afternoon, but when morning's over, I'm done with this. There's new strategies that you want to look at. And honestly, there's no reason to be spending your whole day doing this. But I just wanted to show you how it's hugging that line and hugging and hugging and hugging. You don't want to be staying there for a whole day waiting for this to happen. And this is after lunch. Okay, lunch hour happens, and for the rest of the day, it's kind of sideways move. All right, now, as I said, you can trade this pre-market and after the cash open. So once we get those moves, we can continue the trend. Sometimes it'll break above that 200 and that point of control, and then keep going the other way. Again, look for where your resistances are. And rather than read all this to you, you can read it to yourself, but it's the same strategy. You know, after the cash market opens, if you deviated and you came back up to that point of control and it breaks through that and it breaks through the 200 SMA, think about going long. Same thing going short. Now, one thing you need to know is the spot market can chop around the 200-day moving average and a point of control on a 2-minute chart once the prices achieve these levels. That's what kind of happened at noontime. So again, you can get a early cash morning trade out of this, but sometimes once you get that early morning trade, you may get sideways consolidation, let's say from 8 Central Time to about maybe 8:30 Central Time till the cash open, because they're waiting for the cash open. The most important thing to remember is the 200-day simple moving average, or the 200 2-minute simple moving average. That is the most important. That 200 simple moving average is important. Very, very important. Now, you can do day or swing trades. I just wanted to show you. This is later in the day. Notice this between 10 and 10:30 Eastern Time. If you look at the bottom, I put the circle here. Here's an opportunity for a trade. It broke. In fact, here's an extreme. Came back a little later in the afternoon. So remember, 9:30 open. We come right up. Got that next follow-through trade, because we could have traded the extremes at the bottom, and then you could see another extreme. You're coming back to the 200-day moving average. Here's another opportunity here. So you can do these during the cash market. After 8:30 Central Time, I have 9:30 Eastern here. So you can still take another trade. You can still use these parameters to take trades after pre-market. So I do them for a pre-market trade. Sometimes you get more of a distance, more of a movement after cash market, but also it moves a lot faster. So that pre-market is sometimes good for for newbies, not young people, newbies. I'm also just emphasizing here that, guys, you can also trade once the cash market opens. You can do SPY puts or calls on this. You can do a call. You can go long a call, just like you would the future, or you can go long a put, like you would short the future, using the same strategy. Now, one of my strategies is I'm trading the futures, right? Guess what else I'm looking at? I'm looking at the SPY call options at about a 0.40 delta, slightly out of the money. I double the number of contracts, so I do about 20 contracts. Do you know, while I'm trading these futures, I could easily make $400 to $600 on an options trade that morning together with it. And if it's a slow mover and these slow grinders, I get kind of like, I'm tired of waiting. I pull the futures trade off and I keep my options trade on. You would be surprised at how many times these options trades make more money. Downside of the options trade is if you do 3 round trips a week, you have to have $25,000 in your account, because the day trader rule does apply to options and stocks, not to futures. You can trade futures many times you want. But if you like options and you're going to do some of the stuff Jim's telling you, you can also do this every day. So I'm giving you like double things that you can do here. So please be aware that you can do that. And I'm just giving you an example of that option trade. This is actually a trade that I had. I was pre-market trading the futures, traded the futures again, got out, made my couple of ponies, rode my ponies, and said, you know what? This sucker looks strong. Bought 20 call contracts. Now, I'll be honest with you, I didn't stay through the whole ride because I had to leave. I think this is right around 11 o'clock. Had to leave for work, and I do not let them ride. I get out of them because it could turn around on me. This is a 3-minute chart, but you can see how you can get that trend trade. And, okay, now you're done with that. Trade your options. I like to do 20 SPY calls. That's all I do is SPY. So like I said, I do this in the Trader's Den, pre-market every day. Sometimes, although my hours I'm supposed to be leaving there at 7:15 Central, I'm there trading with everybody and putting comments in, sometimes hilarious comments, right when the next moderator's coming. I'm still trading with y'all when I'm in there. Now, we've got this Trader's Den 24 trial, okay? Basically, it's a trial that they're offering you. You get 30 days to change your ways, meaning let's start making some money in the markets. You get 30-day access to the Trader's Den room. There's an on-demand course. It's an introductory course for the night market that Bill Costaritas gives. You get that every Tuesday, the first Tuesday of the month, either Bill or with one of us. Sometimes we do the other Tuesdays. We teach options classes, whatever. No extra charge, by the way. That was Bill's dream about our room, is traders helping traders. You know, he talks to you about different indicators, timing. I talked about indicators. We try to look for low-risk, high-reward trade setups both during the day. And like I showed you some useful tools and trading signals, he gives you more. You can get this by going to Trader's Den, and if you would type that in there for me, Jeanette, that would be very helpful. TradersDen24.com.buy. Now here is the different time periods that we trade. This is blue's time, in blue, light blue right here. I've moved to trading the ES and the ZB. And basically, we're professional traders. We're putting our money up on the line as we trade along with you. And we're coaching while we're doing the setups. This is Bill's night market to the right that he's doing. So that just gives you the schedule that we do with the Trader's Den. So we're there almost all day long. We do take breaks, and there's different people doing it. I'm the early morning guy. I could do that 8, but I get a lot of distractions around that time, practice issues and other things, even though I'm sitting here monitoring. So you also get a 2-hour introductory options course I have that's on demand. I did it live once for Traders Den, only did it recently, a couple months ago. You get that as well. We have new extended hours. I mean, that include the morning hours. We have these educational videos. We have all this stuff. You can get 1 month of this for $9. That's less than a meal at McDonald's. That's a supersized me meal, by the way. But you can't even get a dinner for this. There's no reason why you wouldn't want to try this, honest to God. And it does renew at $140 a month, $147 a month, but I'll tell you, people come and they want to stay because it's really like a trading club. You know, that's why I'm here. I stopped training. I stopped doing, 2-day option classes at another place and doing things there because it cost people $10,000 and all this kind of stuff. It's like, guys, we can keep this simple and people can make money simply. Anyway, just go to www.tradersden24.com. You have 30 days to change your ways, and just do that link, www.tradersden24.com buy. And let me go back to my slide. And I would encourage you to take a shot at this. You'll also have this available, and I'm going to also type this in so you have it, www.tradersden. If I can spell it right, I'm bad with spelling. .com buy, and that should work there. And I would really take advantage of this. I don't make a whole lot of money doing this with Bill. I just love trading, and it gives me a place. I really don't make any money off this, to be honest with you. And if you wanted the details, I can tell you. I just like having a place I can go to trade with other traders and to kibitz with them. And I learn stuff too. I'm constantly learning things from the other people there. We've got some really seasoned traders who are members here. Don't even present. They don't want to. So this is the place to go if you want to do this. Anyway, I'll open up to a question or two. I am out of time, so I've got to kind of boogie here. You can look at the video again. Very simple strategy. You can trade over and over again. I've been doing this for 2 years. And again, sometimes you'll have a loser, sometimes you have a winner, but I would encourage you to go to the Trader's Den and to do this. It's well worth your time. What's $9, guys? It's nothing, Anyway, let me exit stage right here. You guys have a wonderful day. I know I'm a half an hour late for dinner, so I've got to go. But thank you guys for having me, and have a wonderful weekend. Be very safe on this Memorial Day weekend, folks. I'll actually be seeing patients on Monday because I actually have a big military population here, and some of the people work on base, and they love when I'm able to see them. And I actually get my dedication to the veterans on Memorial Day is to work Memorial Day, believe it or not. Hey, don't soldiers work Memorial Day? They do. I'm really pro-veterans. Anyway, have a great day, everybody. I hope you have a great day and be safe. And again, www.tradersden24.com. And right there, and that should take you right to it. I think I tried it earlier. And if you have a problem, let us know right away so we can type it again just to make sure I did it right. So please feel free to come, and benefit from what you can do. And like I said, I'm going to be exiting stage right here because I got to go. My wife will murder me. Some family's in town, but I wouldn't leave here without doing this. Come on, Jeanette.
Thank you so much, Frank. It's the link is working fine. It's tradersden24.com/buy. There was a lot of questions in here about the times of day in the room. They run that room all day long. They start up in the morning and they just change hands between options traders, stock traders, futures traders. Once you get into the room, you can see the schedule very clearly and start anticipating who's going to be on there next. And then, of course, Bill Costaritas runs the night session, and they start that up in the afternoons around 5, and he comes on and off giving you the actual trade setups. Anyway, so I'd like to thank everybody for joining us today here at Trade Thirsty. Go ahead and mark your calendar. Our next live event will be Wednesday night, June the 17th, and so we're looking forward to that already. So put it on your calendar, Wednesday, June 17th. We'll have the replay out with all of the offers that were made today, all of the links that were provided and the offers that were made if you showed up late. So if you have questions that did not get answered, you can, for Frank's presentation, you can email support@ tradersden24.com, and they'll get back to you. And our email for support is help@tradethirsty.com. So anyway, y'all have a great weekend, nice long weekend here in the States, and I'm about to go take advantage of it. I appreciate you coming, and we'll see you in a couple weeks.
All right.